So let me start with explaining what Bitcoin is, just very briefly. Bitcoin, on the one hand, is a currency like the dollar or like the euro that you can use for payments of any kind. But on the other hand, Bitcoin is also a payment network like PayPal. So it facilitates, there it is, it facilitates the flow of the currency. And it's really important to understand this network part of Bitcoin, because in the media people always talk about the price and it's a bubble and it's an investment and this and that. But what's really important is Bitcoin the network, because what Bitcoin the network allows you to do is to send money to anybody on the planet that has an internet connection or a cell phone, to do that for free, instantaneously, and without a third party. So you don't have to trust anybody else and nobody can stop you. That's basically what Bitcoin can do. And the value of Bitcoin, the currency, comes from the fact that it's the only vehicle that you can use to ride around on that network. So this is the more technical definition, if you will. Because Bitcoin, the network, also allows you to use that place to allocate property, to register contracts, to synchronize information. There's all kinds of exciting possibilities there. So we're very much just scratching the surface. I mean, this is like the internet in 1993. There was no eBay back then. There was no Google back then. So all these things are still to be built on top of the Bitcoin protocol. A little bit about the growth. Bitcoin has been growing for the past 5 years by a factor of 12 every time. So every year it's grown 12 times bigger than the year before. The market cap, so if you take all the existing Bitcoins in circulation and you multiply them by the price, that total is over $11 billion today. Annual turnover, $55 billion. Bitcoin is being accepted by increasingly large companies like Overstock, Zynga, who's famous for Farmville, Tiger Direct, and many others. We'll talk about that in a second. To give you an idea of the revolution that Bitcoin is, think about people that work abroad and that need to send money home. This is called remittance, the process of sending money home to your family. These people face costs today of at least 6%. What you can see here is more or less all the possibilities that these people have in the traditional fiat system. No possibility is lower than 6%. So if you save together $1,000, you want to send it to your family, the fee is $60 at the minimum. The people I talked to in Guatemala last month, they actually pay 20% in remittance fees. So compare that to Bitcoin, which is usually almost free. This is, for example, a Bitcoin transaction of November, a couple of months ago. This was a transaction of 195,000 Bitcoins, which multiplied by 800 is over $100 million. And that happened instantaneously. We don't know from where to where. It could be from Pakistan to the United States, who knows. And the fee was zero, completely free, instantaneous. So that's quite a difference. And all of this technology, of course, can be used for remittance as well as for many other things. Bitcoin, the payment network, the volume, right now it dropped a bit. I think it's actually below $100 million. But as you can see, it's in direct competition with all these companies: Western Union, PayPal, Visa, American Express. So it is really there. I mean, it's not just something that people talk about. These volumes are real and they're growing every day, or at least every year. So one of the most asked questions is Bitcoin a bubble? Well, before we can answer that, we have to wonder, well, which bubble are we talking about? We had the 2010 bubble, where we had 600% rise and then a huge crash afterwards. 2011, 900% rise and then a big crash. So which one are we talking about? Maybe talking about the 2013 bubble. We had a huge rally to $260 and then it crashed down to $50. And then we had 2013 bubble number 2, which was a rally to $1,200 and then down to $500. So for starters, this is not natural. When you talk about a bubble economy, bubble asset or anything, you have a build-up and then there's a crash, and then for a long time nothing happens, like Japanese stock market or the NASDAQ, those kind of things. That's not the case in Bitcoin. We've seen instant recoveries every time. And also let's have a look at, well, what is a bubble really? How do you find a bubble? One definition is that it's trade in high volumes at prices that are considerably at variance with intrinsic values. So that's obviously referring to something like a stock, because a stock in intrinsic value in a stock is usually refers to some kind of PE ratio that you can go back and check historically. But Bitcoin is not a stock. There is no Bitcoin corporation. Bitcoin is a network. It's a peer-to-peer. If you ever downloaded a movie with torrent, I'm sure many of you have, then you know that there is no Torrent Inc. There is no corporation behind the torrent network. It's decentralized. So Bitcoin is not a stock. But what is it then? Well, it's a technology. Bitcoin is a technology. And what do we know of technologies is that if they have mass appeal, if they're really disruptive and they potentially can be used by everybody in a society, then we have this S-shaped adoption curve, right? So in the beginning, only very few geeks are using it, and then it picks up, and then the majority starts using it, and all the way in the end, you see that also grandma is buying a cell phone or is on Skype or something. And that's the reason why in Skype, for example, we see these, I don't know, can you see these slides well? Is that okay? So that's why you see these parabolic rises. That's basically the bottom side of the S-shaped adoption curve. So we see something similar in Bitcoin. This is one service. It's called My Wallet. It's a place where you can go online and have your Bitcoin wallet information being stored. It was below 100,000 wallets 1 year ago. Right now it's over 1 million. So when you look at Bitcoin prices, it looks pretty insane when you look at it this way. It looks like it's going straight up, and then you can imagine it's going to go straight down right after. Maybe there's some because of the improvement. Yeah, go ahead. So, but there's also another way to look at the same price. I mean, these two prices are exactly the same. The period is exactly the same, but this is a logarithmic chart. So basically, you put on your parabolic glasses and you look at the price, and then you see a very orderly move upwards. So you see the scale there, 0.01, 0.1, 1, 10, 100, 1,000. So what we see basically is that we have this parabolic adoption curve. Every time more and more people are adopting Bitcoin, and the only way to adopt to Bitcoin is to buy it. And there's a finite amount of Bitcoins out there, and that's why the price is going up so aggressively. Yeah, I think that's better. So, and also when we think about, sorry?
A bit more.
It's getting cozy in here. So it's actually, I mean, these bubbles, what we're actually talking about is not bubbles. They're not bubbles. This is volatility. The price is just going up and down aggressively, and that's because the market is discovering Bitcoin. It's finding ways to adjust to this new thing that's changing everything. Similar to what happened to oil. The oil price in 1850, which was when oil got commercially discovered for the first time, was extremely volatile. Went up and down every week. The prices were different inside the USA, for example. We had different oil prices all over the place. And then over time, there were market makers, there were traders, there were all kinds of people that found a profit and that took away the volatility over time in the price. So something similar is going to happen in Bitcoin, and is already happening. If you talk to somebody that was into Bitcoin in 2010, they laugh. They laugh their ass off when they see the price today. This is not volatility. This is like back in my days, it was like 50% up and down every day. So things are changing, but it's important to see things in perspective. Differences with the euro. Bitcoin is, or with any fiat currency, with any national currency, Bitcoin is a decentralized system. There is no central bank. There is no central agency that organizes things. Bitcoin is lightweight. So that means that you can send something directly to somebody else. There is no bureaucracy you have to go through. If you look at how a transaction works in the traditional system, you'll see that it goes from your bank, not directly to the other bank, but first to a clearinghouse, and then there's a whole road that it has to go through to finally end up with the other bank and then hopefully in the hands of your friend. The supply of Bitcoin is extremely predictable. We'll talk about that in a moment. There is no third-party risk other than in the traditional system where actually your money in the bank is a loan to the bank. If the bank has a problem, you lose that money. Bitcoin is entirely voluntary. Nobody has to buy into it. You're not forced to pay your taxes in it or anything. And Bitcoin is also open source, so that means it's open for innovation. Anybody can take the source code and launch his own coin. Anybody can make a proposal to improve Bitcoin, those kind of things. So this is the Bitcoin financial policy for the next few years. So we don't need a man with a beard to come up every few months and to say, oh, we are going to do this and that. Bitcoin has a mathematically defined supply in the protocol. Everybody can read it, so it's entirely predictable how the supply will evolve. We're now at about 12 million Bitcoins in circulation. Over time, this will increase slowly to 21 million Bitcoins. Very different from traditional currencies. This is, for example, the balance sheet of the ECB. This is only a reflection of how much money is created. It's what's on the balance sheet that is countering the new money. But anyway, it's a good indication of parabolic growth in the money supply, and that means eventually the value of the euro will erode. It will go down, obviously. In general, I wanted to mention a couple of things about the traditional financial system as well here, because you cannot look at Bitcoin in isolation. Bitcoin is something that is existing in the economy, something that has repercussions, and actors in the economy make choices based on the alternatives that are available. And the current paradigm we operate in is the traditional system. And I just want to point out that there are some things that are pretty frightening that are happening with the system. And it's important to know this because that will lead you to understand why Bitcoin is spiking up so much, for example, in certain regions, why many people are starting businesses in it, why you could call it financial system of last resort, those kind of things. This is a comment by William White, who is the former chief economist of the Bank for International Settlements. Don't know if you know it. You could call it the central bank of the central banks. It's based in Basel. They basically create global financial policy that's then implemented by the IMF. He's saying that the total debt levels in the West are 30% higher than in 2007. And then he says, like, looking at, because we're seeing already some problems again, he says, this looks to me like it's 2007 all over again. We're going to get the same crisis all over again. But then the question is the response going to be the same? Are the governments just going to, the central banks, are they just going to print money and throw it at the banks and keep them alive in some kind of zombie state like we've seen the past few years? I'm not too sure about that. If you look at some of the comments of politicians, if you look at some actual policy documents about what the plans are. This is, for example, a comment by Jeroen Dijsselbloem last year during the Cyprus crisis. He said that this approach towards Cyprus, by the way, you know what happened in Cyprus, right? I'll show you in a bit. People's bank accounts got frozen. This approach towards Cyprus is a framework on how we are handling the reform of the financial sector, right? And then he says, we don't want any more bailouts. We don't want bailouts. It's going to be bail-in, like in Cyprus, going forward. This is an example. This is a gentleman, he had a company in Cyprus, had more than 800,000 euros on the account. One day he woke up, opened his bank account, and he saw that 720,000 euros were simply being frozen and not accessible anymore because the bank was in trouble. And instead of saving it with new money, they looked at the balance sheet, they looked at the liability side, and then they decided we're going to take away some of these liabilities. And the easiest ones are the ones to the customers, the deposits. We're just going to wipe out these deposits. So finally, where is this bail-in policy being prepared? This is public information. You can look it up on the website called the, let's see, Financial Stability Board. So what we see is that I made this little map where you can see all the countries in which bail-in legislation is either being prepared or already enacted into law. Basically the West. You're talking about the Western financial system. So I'm kind of cautious when we talk about a new financial crisis coming up. I'm pretty sure it's going to happen, but it might look very different from what we saw in 2008. So a few more comments about what's next in Bitcoin, what I think the next steps are, what I think we'll see happen in the Bitcoin economy. First of all, I think we're going to see more adoption, many more. I wouldn't be surprised if we have 5 million people using it, we'll be hitting 20 million by the end of this year. So we are very much in the early phase of the S-shaped adoption curve. And that means that the amount of users can shoot up aggressively. If we imagine ourselves being Facebook now in Bitcoin, we should be in December 2005. They had 5 million users back then. If we have a similar growth, we could be looking at 500 million users by 2019. We could be looking at 1 billion users by 2021. That's how fast these things can go. Of course, there's a little bit more friction in Bitcoin because the learning curve is more steep. There's some money involved that you have to think about. So I think actually it's going to be a bit slower than that, but it's possible. Another trend I think that's definitely there to stay is that Bitcoin is going physical. It's coming towards you. This is a Bitcoin ATM, I think in Toronto. There are hundreds of these Bitcoin ATMs that are already being ordered, that are being shipped around the world, that are going to be installed, very likely also in the Netherlands, where you can just go, just like you would go to get some money out or buy a cell phone card, you'll be able to just buy some Bitcoins in the kiosk. And then another trend that we're seeing is this remittance network. So we have already companies that have lots of physical locations where people can deposit cash to send home. Think Western Union, those kind of things. There's a company called ZipZap. They have 700,000 locations, these type of cash receiving locations. They're going to use that network to create a Bitcoin-based remittance network. So this is going to revolutionize remittance around the world. And so that's another example of what I mean with Bitcoin is going physical. Another thing, another trend is safe storage. That's a big question many people have, like, okay, I have these Bitcoins. How do I store them safely? I don't want to trust another party to do it. I want to be my own banker. Well, there's these physical devices that are called hardware wallets. They're going to be all over in 2014. You'll be able to buy them. They cost below $100. So for anyone who's serious about Bitcoin, this is a way to not only store your Bitcoins in a way that they cannot be hacked, but because you can just plug them into your USB port, you'll be able to access them very easily and spend them very easily. So it's like the best of both worlds. Another thing I think we'll see more and more is integration. Mergers and acquisitions is something we've seen already. The first Bitcoin company got bought recently. It was a company called Blockchain that bought the most popular iPhone app. A lot of these companies are now becoming cash rich, and so they want to expand, and I think we'll see more mergers. We'll see development networks where people create platforms that other people can plug their apps into. That's something on the horizon. We'll see projects like Mastercoin, Ethereum, these kind of projects that are working on creating a glue, if you will, between these altcoins. I'll talk about that in a moment. There are many, many alternatives to Bitcoins. There are many ways in which you can use the same crypto technology to allow for other things than just Bitcoins. But now all these protocols operate separately from each other. And so what people are working on is a layer below that where you have decentralized exchange that's possible, all those kind of things. So exciting stuff. It's a little bit complicated, but it basically means more ease of use. It'll basically mean that you have one device or one environment from which you can do anything. Exchange one coin for the other, get a loan based in Bitcoin. Maybe you want to buy some real estate based in Bitcoin. You want insurance for your car. Eventually all that will be possible. And then also something that's more and more relevant in Bitcoin is just personal reputation. If you want to be your own corporation, you can today. I mean, you can register your own corporation in the blockchain with a couple of clicks, and using that you can apply for a loan, you can do your own IPO, launch your own stock and sell it in the market. So that means that your reputation becomes very important, and we'll see more companies working with reputation-based economies in Bitcoin. Bitcoin mining, we can talk about the technical details more, but Bitcoin mining is moving from the basement to the cloud. That's definitely a trend. So before, I'll just say very briefly, Bitcoin mining, what it is you help the network by clearing transactions, by approving transactions with your computer, And you're being rewarded for that in transaction fees. You get actually, the network pays you money to do that. And so it's becoming an industry. It's actually a $1 billion industry already. And the scale is moving up. We're seeing larger scale corporations, and they're selling mining contracts to the public. So you can actually, just like when you buy some space in the Amazon cloud, if you buy some hosting space or some computation power, right now you're also able to buy some mining power for like a year. You can buy a yearly contract, those kind of things. So from the basement to the cloud. Bitcoin banking. We are seeing companies that are offering 100% reserve deposits. So you can actually send your Bitcoins to them and they will make sure that it's stored safely. It's like a parking garage for your Maserati, for your Bitcoins, in other words. There's a small credit market already. So if you want to apply for a loan, you can actually do that, and the loan can get crowd-funded. So you get maybe 100 people that pay for your 1,000 euros or your 10,000 euros you want to borrow. That's already possible. It's happening in Bitcoin. A company called BTC Jam is one that's working with that. Insurance contracts is very young still. I think we'll have to wait another year probably before that really kicks in. And then in general, there's this whole infrastructure I was talking about that's being built for all kinds. I mean, any financial contract you can imagine will be able to happen or to be implemented in this crypto environment. We can imagine entire corporations that run their accounting inside Bitcoins that's 100% verifiable. So that even though you don't know all the details of who's spending what, the mathematics make it so that you can know for sure that there is no fraud in the system. And that's really revolutionary for emerging markets, because you'll be able to have sound accounting in very unstable environments. So that's really exciting. And then finally, what I call the crypto-to-crypto economy is something very new. To give you, I'm going to illustrate it with an example. There's this company called Blockchain, which I really like. That's why I'm wearing a t-shirt. And they're hosting over 1 million wallets now. So you can just go to the website and set up your own wallet for free. It's client-side encrypted, so they don't know your password. But they do store it for you. They store the information for you that's encrypted. So over 1 million people have done that today. They're storing over 1 million Bitcoins in there. So that's close to $1 billion in value. They have the most popular iPhone app. They have the most popular website. They're growing from 6 employees to about 50 this year. And they don't have a bank account. They have no bank account. Everything happens in Bitcoin. Their revenue is in Bitcoin. All the expenses are in Bitcoin. All the employees are paid in Bitcoin. And that's really something to think about going forward. And I think we'll see like a split between these companies and then the other companies that still have a firm leg in fiat land. So just to get you thinking, these are a couple of the trends that I'm seeing. And then of course, no presentation about Bitcoin as investment would be complete without some educated guesses of what might be possible if we look at price. What I want to illustrate with this before we talk about it is just what kind of upside potential there is for Bitcoin, and that plays into something we call the risk-reward ratio. And so what I want to illustrate here is that the potential reward for Bitcoin is so enormous that it justifies taking a small risk in Bitcoin. Maybe invest 5% of what you have in Bitcoin, or even just 1%, because the upside is still, even at a price of 800, is still quite impressive. For example, if the Argentines, in Argentina there's about $50 billion in US greenbacks circulating, just paper money. If they decide to switch that for Bitcoin, which is much more liquid, much more easy, much more fraud-proof, much less prone to theft and those kind of things, if they decide to do that, Bitcoin prices will rise to over $2,000. If the people that are holding gold, if they move into gold 2.0 for just 1%, then the Bitcoin price will rise to over $3,000. The remittance market I was talking about, which Bitcoin obviously has massive potential, and that potential is we're going to see that in the next year already. If that becomes a Bitcoin market, prices will rise to over $6,000, close to $7,000 for one Bitcoin. E-commerce, it's a $1 trillion industry. A lot of players in the e-commerce industry, they have very thin profit margins. They maybe have profit margins of 5% or lower. and a lot of their money is going to transaction fees. If you work with PayPal, you pay between 2 and 5%. Change that for Bitcoin and it's between 0 and 1%. That's a huge deal on the bottom line. So if the e-commerce currency of the world becomes Bitcoin, we can see prices north of $10,000 for 1 Bitcoin. The reserve currency is the dollar. I don't see why it would have to remain the dollar, because they're destroying the value every day. I mean, $65 billion are being printed today, every month, just to keep the American economy afloat. Why would we have to subsidize that if we just want a global currency? Why would we have to subsidize wars in the Middle East? Because that's what you do if you hold dollars, if you keep up the faith in that currency, if you can use this open source, neutral, transparent currency instead. So if that happens, the price of Bitcoin would rise, this is a conservative estimate, would rise to over $500,000 for 1 Bitcoin. So that's why this is my motto. If you have some Bitcoins, you don't need a lot of complicated strategies. You can just hold them for the long term and see what happens. So that's it for me. I'm pretty active on Twitter. If you want to follow what I read and what I think is interesting, you can follow me there. If you have any questions, feel free to contact me. I can't promise that I answer all the emails, but I definitely read them. So, I mean, usually I'm pretty responsive, but that's a disclaimer. If there are any questions now, I'm happy to answer, or thoughts that you have.